This week's episode is brought to you by Crown Haven Wealth Advisors, your retirement reimagined. Coming up today on RetireSHIELD TV.
It's very important that you understand what percentage of your total retirement assets are exposed to both the downside of the market and the upside of the market, and which percentage of your assets need to be safe. We invest in certainty. We make sure that we have enough certainty of outcome for emergencies that we know are going to come that we don't like to think about, but we've got the liquidity for it. We invest in certainty of income to make sure that we're able to do all the things we want to do. And only once those two things are handled do we then even begin to look at the casino. The path to happiness is the absence of stress, because it creates the condition where we are able to pursue our version of happiness, whatever that means to us.
Knowing people and building trust. Get on the right path to achieve your retirement goals with Casey Marx and the team at Crown Haven Wealth Advisors. Understand the process and challenges of retirement planning. Discover the keys to a successful retirement.
Hello and welcome to RetireSHIELD TV. I'm consumer advocate Morgan Patrick, and as always, I am joined by the founder and CEO of Crown Haven Wealth Advisors and creator of the RetireSHIELD process, Casey Marx. Casey is not only the author of Baby Boomer Retirement Bootcamp, he is also a retirement income certified professional, as well as a certified financial fiduciary. It's good to see you, Casey.
It's good to see you too, Morgan.
All right, so let's get into this. Casey, I've heard you use the phrase red money, green money. So what is red money and the opposite, green money?
Well, thanks for the question. It's very important that our viewers understand this, and most people don't think about their retirement funds this way. But at a very basic level, and the reason we talk about this in the first place is it's very important that you understand what percentage of your total retirement assets are exposed to both the downside of the market and the upside of the market, and which percentage of your assets need to be safe. So in other words, we need to understand what our risk capacity is. And our risk capacity is our ability to take on risk in our retirement portfolio. The reason this is so important is because if we experience a loss that is greater than our capacity to withstand that loss, it significantly impacts and it can actually destroy our ability to maintain our standard of living in retirement. So when we talk about red money is money that we're willing to go to the casino table with. We're willing to experience some downside losses and perhaps be charged a fee for that privilege to hit a home run, to go and get as much upside as we possibly can achieve. Green money is money that we are not willing to experience losses with. Now, most people do this based on a gut feeling. They do this based on, okay, I've got a $500,000 portfolio. Within my 401k, I'm going to put 20% of my money in the money market fund or the stable value fund, and the 80% is my red money. Doing it on a gut basis can lead to disaster. So through our diagnostic process that we do for all of our potential clients, we deliver a customized report to ensure that you know exactly what your risk capacity is. Once we know what that risk capacity is, how much you can actually afford to lose, that's the beginning of the process, because once we know that, then we can start to look at asset location, which is the foundation of our three-bucket approach at our office. It quite literally is, what is the purpose of our money? What are we trying to accomplish with it? And where should it be located? And we've gone through this before, but I'll say it again. Banks are fantastic if it's FDIC insured to be safe and liquid for emergencies. Insured accounts are fantastic to create income. They're guaranteed to be safe. And there's no volatility, there's no losses, and there's no risk associated with that portfolio, no fees for managing that risk. The market can be fantastic for hitting home runs, but there's going to be a fee associated with it and volatility. So based on that, we have to determine from an academic basis how much should be in the red. And most of our clients will tell you that they just don't have a lot of capacity to be in that red.
Well, I mean, think about it. I mean, the reference, and when you say casino, I mean, it's at risk.
It is.
And if you are very close to retirement, Casey, how important is it to make sure that that portfolio is balanced to what you need?
Well, so if you're 10 years out from retirement, you're in the retirement red zone where sequence of returns risk can be a very huge problem for you. And that's quite literally the sequence in which you receive your returns dramatically impacts how long your money will last. So if you were to look at a prospective investor that started their retirement in 2002 and then retired, 15 years later, and they just took a normal withdrawal from their portfolio, they'd be out of money. If you were to invert those returns and start, 15 years later and go backwards to 2002, they'd still have a certain amount of funds left. So that's sequence of returns risk. That's one thing you can't control. So if you're in the retirement red zone, you quite literally can't afford to be going to the casino with, the largest portion of your assets, right? So, and then another misconception that exists is like bonds are green money. Treasury bonds are green money. Corporate bonds are green money. Well, that didn't work in 2022 when interest rates rose because the yield that you're going to receive is inversely correlated to interest rates. So there's a lot of misconceptions that exist. So when we're talking about green money is really accounts that are insured against losses. Red money is everything else. And, this whole concept of the 60-40 portfolio, 60% stocks, 40% in bonds, has been proven to not work. Not just based on a total return potential, but also based on a utility potential for our clients in retirement. And that's why we don't employ it at our firm. So maybe an example, somebody comes into your office and they sit down with you for the first time and we're talking about red and green. Percentage of potential clients that you talk with that have really no idea where their risk level is? It's close to 100%.
Wow.
People just don't know, and that's because advisors don't show them this stuff. They don't want to show them the downside. Because, if your entire business model were reliant on there is always going to be risk, I am necessary in order to manage that risk for you, how likely would you be to show people the negative outcome that could occur? Very unlikely, right? So not only do people not understand what the risk is, but they also don't understand how little upside they have with the risk that they're taking. A lot of people think that there's significant upside to their 60-40 stock bond portfolio or actively managed portfolio. And what we have found over thousands of diagnostics is that quite literally, regardless of where the assets are allocated, it could be, international, it could be domestic, it could be, corporate bonds, it could be treasury bonds, it could, you name it. It could be ETFs, mutual funds, whatever. The dial doesn't move much. Your return could get maybe 2 percentage points better, 2 percentage points less. What doesn't change is that the minimum loss potential is somewhere between 10 and 20% for darn near everybody. The maximum loss potential, depending upon the risk they're taking, is somewhere between 30 and 50%, depending upon the risk they're taking. They're always being charged a fee. It doesn't work to create income. And it exceeds their risk capacity. So I'm waiting for the day that someone comes in with a portfolio and we go, that's better than what we're doing.
Well, let's figure out. I mean, RetireSHIELD, how is this going to help with this situation?
Well, first of all, what we're going to do is we're going to sit down with you. We're going to get to know who you are as a person. And we're going to build a portfolio based on what you want your life to look like. But how it solves it from a practical standpoint is we're completely independent and we're acting in a fiduciary capacity. So we have access to the entire toolbox. And we're going to use the entire toolbox to select the exact tools you need in order to achieve the outcome that you're looking for, to solve the job. So, if I were building you a house, you'd want me to use all of the proper tools. You'd want me to know how to use all the proper tools. And then you'd want me to build that house with the same care and attention that I would if I were building the house for myself. That's all we're doing here. We're understanding what you're trying to accomplish, and then we're building the house. So, and I know Morgan's going to talk about how you can get in touch with us.
Well, we are about to take a quick break, but if you want your own personalized RetireSHIELD plan or a free copy of Casey's book, Baby Boomer Retirement Boot Camp, make sure to call the number that's on your screen right now and talk with one of our representatives, or you can visit the website, RetireSHIELD.tv.
Memories with Grandpa.
My first job.
My fourth job.
Crazy road trips.
Our first date.
Meeting our son.
Exploring our world.
Our world. Family and friends.
Our special song.
Secure your retirement by meeting with your local, independent, and fiduciary advisor at Crown Haven. Take advantage of your complimentary relationship visit by calling Casey Marx and the team at Crown Haven today.
Hello and welcome back to RetireSHIELD TV. I'm consumer advocate Morgan Patrick, and as always, I am joined by the founder and CEO of Crown Haven Wealth Advisors and creator of RetireSHIELD process, Casey Marx. Now, Casey is a retirement income certified professional as well as a certified financial fiduciary. So, Casey, before the break, you were really telling us about, how some forms of retirement savings can be exposed to upsides and downsides of the market, that casino we talk about, as well as, how some retirement savings can actually be secure from the market risk while still seeing the growth through your RetireSHIELD plan. Now, I know a lot of people out there nearing retirement would love to hear more about how this is possible.
Yeah, and I think to make it simple for people to understand, I like to use analogies because analogies, create pictures. So first of all, the reason this concept is so important, the reason the RetireSHIELD is so important is it's based on the academia. And it's based on landing the plane. It's based on ensuring that you're going to have enough income in retirement so that you can enjoy the life that you've worked so hard to be able to enjoy. So an analogy that I like to use is the sledding analogy. And so I grew up in the Pacific Northwest. And as a kid, when I was 12 years old, we used to go up to these huge hills and we'd look down at the bottom of the hill and we'd say, we don't care how fast we're going to go. We don't care if we fall off on our way down. We're just going to fly down this hill, then we're going to run up to the top of the hill and we're going to fly down again. Well, now, I'm older. I'm not 70, but I'm older. If you were to put me at the top of that hill right now and say, get on one of those sleds again, Mr. Marx, enjoy yourself, well, I wouldn't be as likely to do that because I know that at a very basic level, if I fall off that sled, it might hurt to get out of bed tomorrow. I might have to require surgery on one of my knees that's screwed up from playing basketball for 20 years. There's just a certain risk capacity that I have that I can't change, and that's okay. I don't do the same things and take the same risk that I took when I was younger. So the question I ask my clients on a daily basis is, number one, do you know what your risk capacity is? Are you at the top of the hill about to get on a sled and crash? And what we do for our clients is we make sure that you're able to enjoy sledding down the hill and know you're not going to crash. The second question is, knowing that human beings are completely inept at predicting future results. We talk about the black swan events. We talk about COVID. We talk about bond duration risk at Silicon Valley Bank. We talk about all these issues. We have a fundamental question to ask ourselves. Do we want to keep our funds in a position where there is someone else managing it that could be financially incentivized to keep our money at risk, or we're managing it, which takes a lot of time and energy in order to do that? And we know there's going to be stuff that happens that we don't see coming, or do we want to invest in certainty? Because if we invest in certainty, then we get an outcome we're looking for. So at a very basic level, what we do at our firm is we invest in certainty. We make sure that we have enough certainty of outcome for emergencies that we know are going to come that we don't like to think about, but we've got the liquidity for it. We invest in certainty of income to make sure that we're able to do all the things we want to do. And only once those two things are handled do we then even begin to look at the casino. Because quite frankly, you don't go to Las Vegas and put your entire portfolio on red. You just don't do it. And then the question becomes, what's your time worth? How long have you been working to save what you've saved? How long did it take to save that? And how many sacrifices were made to do that? How many recitals were missed? How many dinners did you not go out on? How many trips did you not take, knowing with the presumption that when I get to retirement, that's when I'll do it? Now's the time to shine. Now's the time to do these things. They call the 60s the go-go years, the 70s the slow-go years, and the 80s the no-go years for a reason. We want to embolden our clients with the confidence to know that they're going to be okay in any market environment. They've got enough green money that is not susceptible to volatility, that they can live their life without stress, with peace of mind, because as far as I can tell, the path to happiness is the absence of stress, because it creates the condition where we are able to pursue our version of happiness, whatever that means to us.
Certainty, ease of mind, knowing you have that path and you've planned it out, you're working with a fiduciary and a fiduciary firm.
Yes.
It gives you the confidence as you head towards your retirement.
It's if I could bullet point it out, it's like comprehensive advice is extremely important because everything you do has a ripple effect. Right. Independence is extremely important because that means you can use all the tools. Fiduciary is extremely important because then you're acting in the client's best interest. Then you go over here and you say, what are they focused on? Retirement planning is extremely important. It's totally different than financial planning.
Right.
Then you've got the trademarked system that we have built based on academia to ensure that all these other things are taken care of. So all of those things are important, and that's why we trademarked our process, because it just wraps it up in a bow for folks.
Well, let's do that Cliff Notes version.
Yeah.
If you remember those. But RetireSHIELD, how is it going to help?
Well, from a relationship standpoint, we get to know who you are, and then we manage that relationship with the utmost integrity, service, and care. We diagnose the real threats to your portfolio. We make sure that those aren't going to be threats anymore, and we take advantage of opportunities so you can live the life that you want to live. From a scope of work standpoint, we make sure that you've got enough secure income. Your investments are set up properly to your risk capacity. We look for ways to reduce your taxes. We make sure healthcare is taken care of, and then we make sure that your estate plan is set up properly. All of those things are wrapped up in a neat little bow, delivered to you in a leather-bound binder, so anyone that you care about knows exactly what's going on.
There's a lot that goes into retirement planning. RetireSHIELD, we're talking about it today. If you're out there and you're doing it yourself, Casey, I mean, it's not a walk in the park. There are a lot of things you have to consider. And again, we're going to give you an opportunity to do that very thing. So think about this, folks. If you are out there and you have not started planning, or maybe you're in the middle of something and you're confused, there's not the feedback, the communication, it might be time for that second opinion. So with that, we're about to take a break. But before we do, I wanted to remind you that to basically join the thousands of Hoosiers out there that have already shielded their retirement with a personalized RetireSHIELD plan. This is very important. Our lines are open, always open, and they're open right now. And again, you can call the number that is on your screen. Our representatives are standing by. You can also visit our website, RetireSHIELD.tv, for your own personalized RetireSHIELD plan or a free copy of Casey's book. Again, that book is Baby Boomer Retirement Boot Camp. Once again, you can go to the website, RetireSHIELD.tv, for your own personalized RetireSHIELD plan or a free copy of Casey's book, hot off the presses, Baby Boomer Retirement Boot Camp.
Do you know what that sound is? It's me traveling the world. Europe to Asia. I'm vacationing and living the retirement of my dreams because I just met with my advisor at Crown Haven. They helped me turn my nest egg into a golden egg. Take advantage of your complimentary relationship visit by calling Casey Marx and the team at Crown Haven today.
and welcome back to RetireSHIELD TV. I'm consumer advocate Morgan Patrick, and as always, I am joined by the founder and CEO of Crown Haven Wealth Advisors and creator of RetireSHIELD process, Casey Marx. Now, Casey is a retirement income certified professional as well as a certified financial fiduciary. All right, Casey, it's time for question and answer. So today we have been discussing how certain terms of retirement savings are exposed to market risk, but also how some retirement savings can, well, remain shielded from that market risk while still growing through RetireSHIELD's plans and that trademark process. So with that, let's get into some RetireSHIELD TV viewer questions. Now remember, you can ask Casey your retirement questions by going to retireshield.tv and filling out that TV question form. So first question up for you, Casey, is from Deborah, and she's in Westfield. I'm 3 years out from retirement, and I'm wondering what portion of my portfolio should I be invested in as far as equities. I would like to continue earning interest on my investments, although I'm a little worried about losing a large portion of my retirement savings.
Well, Deborah, I want to thank you for your question. I want you to first realize that this is a completely personalized approach that must be taken, and what it starts with is a relationship visit. We need to understand what your goals are and what you're trying to accomplish. You're speaking more of a from a numeric standpoint, saying, I don't want to see all my time and energy lost if I lose money in the market. But that's really where it starts. We need to understand who you are, what your particular income needs are going to be in retirement, how taxation is going to affect you, how we can help mitigate that, what inflation is going to look like based on what your portfolio is, et cetera, et cetera. And all of those things will help us build out a completely customized retirement map for you that is a very clear path to get to the result you're looking for. It starts, though, with a relationship. And, you know, we say that our relationship visit is set up to essentially create a relationship based on trust and shared values, because we can't have a relationship without trust, and we can't have a plan without a relationship. So that's really where it starts. And I would recommend that you reach out to us. I'll sit down with you. We'll go over what your goals are, and we'll take it from there.
All right, next question up. I love question and answer because you get a feel for what other people are going through. But remember, too, you need a custom plan for you. You need your own retirement shield. So Kevin in Indianapolis is asking you this. I am 58, a conservative investor, and I'm curious, why not just put 100% of my money in completely safe green money investments? Are there any benefits to red money in retirement?
So that's a great question, Kevin, and I appreciate that. You know, that's a difficult question to answer, because you would think that green money is just the way to go with everything. That comes back to the utility of the money. What is the purpose? So if you were to ask me, you know, if I were to be 60 years old, 70 years old, where I'd want my money to be, in a completely truthful way, I would say, well, I'd want to have enough money to handle emergencies, and I would want enough money to create income for myself. So there's really no reason to take risk unless you're trying to hit home runs. So for you personally, what we would do is we would sit down and we'd figure out if you need to try to hit home runs. Most people don't. You just need to hit consistent singles and doubles. And I mean, that's the story of time, right? The tortoise beats the hare. So if you're just moving forward consistently, not going backwards, I mean, that's why Warren Buffett's first rule of investing is don't lose money, and his second rule of investing is don't forget rule number 1. It's the power of zero. So it's a compelling argument to make, to say, why would I want to go red with anything? In practical application, the reason we would go red with anything is because it helps us achieve certain tax advantages for our clients. It helps create more liquidity for our clients, things of that nature. But it's certainly not the main event. It's certainly not why people are coming to us. The reason people are coming to us is for the cohesive retirement plan and our philosophy, which is based on exactly what you're asking for. It's based on certainty of outcome.
Well, and you said it before. I mean, you're going to be protected. You're going to have your green, and then you can have some of that red.
Yeah.
And you can go to that Wall Street casino.
Yeah, and that's based on whether or not that's based on two things. It's based on capacity, which is the most important thing to consider, but then it's also based on tolerance. And if you have the capacity, then the next question becomes, do you have the tolerance for it? And some people can afford to lose some money, but they don't want to. And if you don't, cool. And that tends to be how I think of it too. So how we do it is we set up enough in the bank and enough in the insured accounts. Some people will have the capacity and have a little bit of tolerance, so we'll use a little bit of bucket 3.
Next question, let's head out to Fishers. Steve is there. Here's the question. My current advisor explained to me that even though all my investments are in the market, I have an all-weathered portfolio that will protect me from a market crash. Have you heard of this terminology, and how correct is that assumption?
Okay, so Steve, I want to thank you for your question. I'm just going to be very direct here. There is no such thing as an all-weathered portfolio that's in the market that will protect you from a crash. It doesn't exist. At any one point in time in history, every single asset class that exists has lost at least 70%. If you were to invest in a blue chip stock in 1971, you could have lost 70%. Gold has dropped by that much. Real estate has dropped. Every single asset class has lost a significant portion at one point or another due to things that we do not expect. So an all-weather portfolio is a marketing term that is used in order to convince people that they're safe when they're really not. So how we handle that at our firm is we ensure that you have the proper asset location based on our 3-bucket approach, which quite literally looks at the pros and cons of each type of location you can have your funds in, banks, insurers, and the market, and looks at it very objectively, because there's no perfect tool. And that's the other thing. If somebody's trying to tell you there's a perfect tool, it doesn't exist. In the realm of finance in which we occupy, there is no perfect tool, but there is a perfect combination of each tools that can be customized for each individual person. And in order to get access to that, you have to be working with an independent professional operating in a fiduciary capacity who has the subject matter expertise to use all of those tools properly for you, and they can only do it once they understand exactly what you're trying to accomplish, which is why our first visit's a relationship visit.
Well, that is all the time we have for you today, and we'll be back next week. But if you are looking for that peace of mind in your retirement, don't wait. Remember, our lines are open 24/7, so call the number that's on your screen right now. You can also visit RetireSHIELD.TV for your free copy of Casey's book, Baby Boomer Retirement Boot Camp, or to have a personalized RetireSHIELD plan created for you. That's right, customized for you by Casey and his team of financial advisors. Once again, go to RetireSHIELD.TV for all that information. And again, you can call the number that is on your screen right now.